Hello and good evening to everyone. Today we from Team 7 will be discussing the financial statement, adjustment table, and advice statutory for the Masmira Enterprise. First, we look into the company profit or loss statement, which also known as the income statement. This financial report provides a summary of the company's revenues, expenses, and overall profitability over a specific period of time. And the primary purpose of this statement is to show whether the company has achieved a net profit or incurred a loss during the reporting period. Masmira Enterprise profit or loss statement are divided into three key sections. Let's start with the revenue section. Revenues represent the income generated from the company's core business operations. This includes sales of product or services, return and allowances, and discounts also. It is important to note that the higher the revenue, the more successful the company is at generating income from its operations. To get the total revenue or net sales, we need to minus the three items in a revenue section, which are sales of product or services, sales of return and allowances, and also sales discounts.
Okay, so based on your statement about the importance of having a high revenue, what are the key factors that can cause an increase or decrease in revenue?
Okay, that's a good question. Revenue can increase due to higher sales volume, better pricing strategies, introduction of new products, or even expansion into new markets. On the other hand, it can decrease due to reduced demand, increased competition, or economic economic downturns. Now let's move into the second section, which is cost of goods sold. Cost of goods sold represent the direct cost of producing goods or services sold by the business. But Masmira Enterprise gross profit is calculated by subtracting cost of goods sold from total revenue above. This figure shows how efficiently the company produces its products and manages production costs. Now, into the third section, which is operating expenses. Operating expenses are the costs associated with running the business on daily basis. Masmira Enterprise operating expenses are split into selling and administrative expenses part. We can get the total operating expenses by summing up all the items in these two parts. Take note that interest expense should be excluded from operating expenses and is considered as other expense. Uh, Finally, the net profit or loss is the bottom line. It is calculated by subtracting all expenses, including interest, and from the total revenue.
So, from the investor perspective, why is it so important to use this profit or loss statement before making a decision?
Basically, investors use the profit or loss statement to assess a company's financial performance and profitability. They look at key metrics like revenue growth, profit margins, and net profit to determine whether the company is a good investment.
So, let's move to the statement of owner's equity. So, the statement of owner's equity explains how the owner's equity changes over a specific time period. So, the step to do it first, we start with the opening balance of the owner equity, which is the equity at the beginning of the reporting period. Next, we add the net income or subtract the net loss for the period, as this directly impacts the owner's equity. After that, we deduct any impacts the owner's equity. After that, we deduct any withdrawals made by the owner, as this reduces the equity. If there are any new contribution made by the owner, such as additional capital, we add them to the equity. Finally, the closing balance is calculated by summing these elements. This shows the update owner's equity at the end of the reporting period. So it is a straightforward way to see how the owner's stake in the business change.
Okay, based on your statement, what happens to the owner's equity if the business has a net loss?
What happened to the owner's equity is the net loss reduce the owner's equity because it is subtract from the overall balance.
Okay, so how do withdrawals affect the owner's equity?
So the withdrawals will affect the owner's equity because as we know, withdrawals decrease the equity as the owners take out funds for the personal use.
All right. Why is this statement important?
So the statement is important because it shows the stakeholders how the owner's stake has changed during the period, whether through profit, loss, or personal transaction. So let's move to the statement of financial position, or we can call it as a balance sheet. The statement or balance sheet provide a snapshot of a business financial health at a specific point in time. First, we list all the assets of the business. Assets are divided into current assets like cash and account receivable, and also non-current asset, for example, equipment and long-term investment. Next, we list all the liabilities. As we know, liabilities also are divided into two, which is current liabilities like account payable and salaries payable, and one more is the non-current liabilities such as loans payable. Finally, we calculate the owner's equity using the formula assets equal to liabilities plus owner's equity. This formula will ensure the balance sheet remain balanced, meaning the total value of assets it is equal to the combined value of liabilities and equity. So it is snapshot of what the business owns and owes.
Okay. What happens to the balance sheet if the business takes out a loan?
So the liabilities will increase because of the loan, and asset like cash increase by the same amount.
How does the depreciation affect the balance sheet?
The depreciation reduce the value of fixed assets and increase accumulated depreciation, which lower the net asset value.
Alright, so why must asset equal liabilities plus equity?
So asset must equal to liabilities plus equity to ensure the balance sheet follow the double entry accounting principle, showing that every transaction affect both sides equally. So what can I say is this statement are critical to understanding a business performance and financial health. The statement of owner's equity shows change in ownership, while the balance sheet reveals the company financial standing at a given moment.
Alright, so I'm going to talk about part B.
What problems did the Masmara Enterprise encounter in this part?
Okay, as we know that Tata is the one who established Masmara Enterprise, but she does not have accounting literate, so she may have troubles in recording all the transactions in business. So, for example, she may not know the assumptions and principles accounting.
So if we did not record correctly on the transaction in business, what problem will we face?
Alright, as I mentioned just now, if we record the transactions in business without accounting assumptions or principles, we will get an inaccurate financial statement such as profit or loss and other comprehensive income statement, financial position, and statement of changes in equity will not accurately reflect to the business financial performance. This can mislead stakeholders like investors, creditors, and management, leading to poor decisions making.
So how are we going to solve this problem?
To solve all these problems, we need to have strong understanding accounting assumptions, for example, economic entity. It is a business or an organization and its owners are treated as two separately identifiable parties. Let's say I take company money for 500 for personal use. So can we record it debit drawings, credit cash?
No.
No.
Yeah, of course. So the correct one is debit drawings, credit capitals. So on the other hand, for principles, I'm going to talk about revenue recognition, which is companies may not record until it is realized or realizable and when it is earned. We only can record as a revenue when the goods and service is delivered to customers. For example, a company may have provided services to a customer in January, but the payment is received in February. The revenue will be recorded as an earned income in January, and it will be recognized as actual income when paid in the following month. So that's all from part B.
All right. Moving on for the part C, the situation given is as Mesmero Enterprise grows rapidly, Tantari is considering opening more outlets in strategic city locations. This expansion requires new strategies to manage sales, credit, receivables, and inventory. Reassessing credit terms and shipping strategies could significantly improve these areas. Based on the given situation, there are several ways of the appropriate credit term to improve sales. One of the effective solutions is by providing tailored credit terms based on customer profiles. For example, credit history, order volume, and loyalty can encourage higher sales while managing risks.
From your opinion, how can Tantari apply this method?
For this method to work, she has to divide her customers into 3 categories, which are high valuable, reliable customers, moderate risk customers, and high risk customers. For reliable customers, she can offer slightly extended terms, for example, 45 days to encourage loyalty and larger purchase volumes. As for the moderate risk customers, offer the customer standard terms to maintain competitiveness while managing risk, and for high risk customers, require upfront payment, partial prepayment, or cash on delivery until they establish a reliable payment history. As for improving accounts receivable collection, the best option is to streamline invoicing process. Tantari can use an ERP or accounting software to generate and send invoices automatically as soon as goods or services are delivered, and make sure invoices are clear, error-free, and include all necessary details such as due date and payment methods.
That is an effective technique, but to apply this, timing invoices must be accurate, right?
Yes, timing of the invoices is very important for this to succeed. For example, issue invoices immediately after delivery or service completion to avoid delays, and for recurring customers, consider pre-scheduled invoicing cycles. Moving on to the second question, Tantari has to prepare herself in terms of shipping policy. To improve sales, Tantari can provide free on-board destination. FOB destination is the best option because it gives customer satisfaction. Customers are more likely to purchase when they don't have to worry about logistics or additional shipping costs.
I understand your point of view, but can I ask you how will Tantari improve sales by doing that?
That is a very good question. Offering FOB destination enhances customer loyalty and can increase order volumes, especially for regular customers. Moreover, shipping costs can be incorporated into product prices, ensuring profitability while maintaining a competitive advantage. As for the credit management, Tantari can implement a tier shipping policy by requiring prepayment or cash on delivery for high-risk customers. Although for reliable customers, allow credit-approved payment terms. A tier shipping policy ensures flexibility while reducing credit risk. It balances sales growth and credit control by tailoring shipping terms to customer profiles based on their creditworthiness. That's all for part C.
Thank you everyone from your contribution in this discussion. That's all from Team 7 group discussion. Thank you very much.